The stock is up about 35% since its last quarter, so it has every reason to want to sell off in the after-hour session. Yet it's down less than 2% at this point in time, although more can come. Who knows?
As Phil just said, the market is waiting for the conference call, which is fine. Again, we've had this conversation. If this was just valued as an automobile company, it's not a great quarter. Yet record revenue, I get it, and the free cash flow of $4 billion, good for them. Then you look at the margins. You back out basically regulatory credits, and it's below 15.5%. Which is worse than the street was looking for. So that business has been in decline, regardless of what you want to say about deliveries and stuff. I mean, it's a business that is reverting to the mean. Now, people get excited about other things, which is why I don't think the stock is as low as it should be on the back of the quarter. We'll see what they say. It's the promise of everything else that's going to drive the stock.
And they did say in the shareholder deck that Optimus lines are being installed right now. Who knows what the time frame is on that and whether or not it will ever contribute to revenue or at what point it will.
But it's one of those stories, along with robots, that people want to hear. And so Optimus ahead of volume production next year is something that's there. The robotaxi story is alive and well. The energy storage story is a massive pickup over 2Q. I think they were $2.4 billion. They just printed $3.4 billion. I mean, it's 12-13% of the revenue base. It's not insignificant, and it's also one of these stories that is part of the entire mosaic. Now, it may sound like, hey, Tim sounds somewhat bullish here on Tesla. No, I'm not. I don't think it's impressive, the price action, as we've just said, after the move it's had. Stock's effectively 2.2 times up over that April low. But I think you are not chasing this one.
That was a third-person question.
Yes, well,
it was even better.
First time I've ever done that. It's the first time Tim's ever done that.
Yeah. So there's a lot of other bets here, and the stock seems to be the most expensive that it has ever been on a PE ratio. But you're paying for the other bets. You're paying for, as Tim said, the robots, the cyber taxi. For me, it looks a little double toppy for me if you expand that chart back a year. If you look at it just on other bets, I think you're probably too early for those other bets, as you always are with Tesla. I'd probably stay away, let the smoke clear, and see when the other bets actually develop into something that's actually revenue-based.
Right. Dan, I want to get your take on Tesla, but it's interesting because today GM had a tech day in New York City, and they unveiled eyes-off driving, which is like a competitor to full self-driving. And you got to wonder, at this point, you take a look at the offerings in terms of investments in auto land, and there are other ways to play this aside from Tesla at this point if you believe in self-driving vehicles.
Yeah, I mean, here's the good news, right? So I guess one of the notes in that presentation was that all of Tesla's cars right now are capable of full self-driving, right? It hasn't been approved yet. It is still supervised full self-driving. And there's going to be a lot of competition when they finally get to volume production of the cyber taxi. So that's one of the big things we expect to hear about today. I think every time Elon has the opportunity, he does that. You see the mention of Optimus. But again, I'm here in San Francisco, there are 800 Waymos or maybe more on the streets there. This is going to be a hard one to catch up to in the near term, right? And I'm not telling you that Waymo is making money out here too, but this is going to be a loss leader for some time. And then when you think about the cars that they actually make, that pull forward right there, Guy just mentioned those auto gross margins. They're not great, right? So the idea of competition here in the U.S., well, it's coming despite the fact that GM has pulled back a bit. But when you think about their market share here, it's below 40%. In China, it's below, it's probably mid-single digits. In Europe, it's below 10%. So they're not growing this business, and at a time when there's a lot of competition coming. And the last thing I'll just say about this free cash flow, which is really one of the only things that stuck out that was particularly positive. I mean, CapEx was down 37% year over year. If you think that they're focused on the future with robots and cyber taxi and AI, wouldn't you expect CapEx to be higher? So, they might have been playing some games on the free cash flow side.